Hello and welcome back to your favorite stock market weekly analysis show. My name is Evan Medeiros. Thank you so much for tuning in. We're going to cover all things financial markets this week, and it was a pretty lackluster week, I'd say, in terms of news flow. We did have a handful of econ data reports. We had a Supreme Court ruling on tariffs, but generally speaking, from a price action perspective, it's very status quo. Markets, I think, are frustrating the majority right now. Both bulls and bears, they want some resolve, and we're not getting it. We're going to talk about what that catalyst might be and some individual stocks that we're going to take a look at. And we are trading here behind the scenes, so make sure you stick around. Let's get into it. Our sponsor of the episode is Investors Business Daily. They've got two great products. We've got two introductory discount offers to them. Check out the links in the description of their show for their Market Surge, their IBD digital subscription once you get done watching. Now, another announcement from us is I'm going to be hosting a webinar this coming week, February 26th. That is a Thursday, 3 p.m. Eastern time. You can sign up at this link right here. Free webinar, all about our Quant Rockets momentum platform. Been doing a significant amount of development behind the scenes, and I do think it is the premier place to trade momentum if you're a swing trader and if you're looking at trends in high growth, high volatile stocks. You're going to want to check out what we're building here. I'm going to debut the platform and some of the updates that we've made recently. I think you're going to like it. I'm excited to share, so make sure you sign up for that webinar next week. All right, so let's talk about some of the catalysts hitting the tape this week. So on Friday, we got US GDP numbers, which were well below estimates. So if you recall, estimates for GDP are just ratcheting up more and more recent. And we saw a pretty dismal number on Friday. Now there are, some dismissals of this number. It was a government shutdown. The workers that come into this report can skew this data. So all things considered, when we look at, say, the Fed outlook on interest rates, not a whole lot changed after this report. We had a knee-jerk reaction in financial markets, but they all kind of settled back to where they were. So it seems like it's a largely dismissed number at this time. We also on Friday had the US Supreme Court ruling on Trump's tariffs, sort of striking them down. But then I didn't catch all of it, but Trump had a press conference after, basically saying he was, had his plan or his ways to essentially get a 10% flat tariff imposed through other means, right? And through other executive actions. So we'll see how this all, shakes out. Right now, the market really seemed to digest it pretty calmly. A lot of knee-jerk trading in the short term, but generally speaking, not a whole lot of change after the ruling. A couple of markets to talk about is first interest rates. We started to talk about this last week. This is the 10-year Treasury fund IEF. And you can see this is starting to break out here. So this means rates going lower as bond prices go up. It is flagging out right now. We'll see if it can get sort of a continuation pattern out of this and we can get rates, the 10-year specifically, below 4%. We haven't been able to stay below there. And so that test is really kind of on tap right now. Another chart that I think is interesting here, and we are going to look at charts later in the show, but this is high yield relative to treasuries, to the 10-year Treasury. And so basically this chart you effectively want trending higher. This basically shows that the coast is clear, the credit markets are happy, and you can see right now we haven't really been in that situation. We're below the 50 SMA. We've kind of been trending lower. We did get a bounce up this week, but generally speaking, there's some stress out there in the credit land. Could be from some of the aggressive, you've got a couple of things going on. You've got the private equity sort of cases here, Blue Owl and others that are in the spotlight right now. There's also just, a lot of debt raising right now for the AI build out. And so we have some dynamics here that could be impacting this, but it's something we do want to pay attention to. Another big kind of catalyst this week is oil. Oil is hitting 6-month highs above, this is the ETF, so I don't have the WTI price, but we're at 6-month highs here. Now, of course, this is really fueled by a lot of tension that the market is dealing with right now with the US and Iran, particularly this weekend. I think Saturday, Sunday is early potential where the US could, conduct some military action over there. And so there's heightened kind of concerns about that. I think poly markets, raised to a pretty significant 60, 70, 65% plus that there would be a strike at some point. So everybody's on kind of alert, and that's keeping a bid in USO. The convexity, the skew on upside calls for oil energy is rising. Now, back to AI, we did see Meta and Nvidia announce a deal, so we're getting more tightly coupled across some of the, well, in this case, the major heavyweights. They've already been working together, and there's, Meta's been buying chips from Nvidia, but now we have, just a much bigger kind of build out here that's going to be taking place. And speaking of Nvidia, earnings next week, right? So this is going to now be one of the big potential catalysts to kind of get the market, to wake the market up and get things out of the range that they've currently been in. So for the QQQ, semiconductors generally have been working, right? Like that's been a good spot in the market. But the Qs, tech, right, and some of these other, data center plays. We can look at some of those. The old Bitcoin miners converted into powerhouse kind of AI data centers. They've all been stuck in a range. They've retraced, and they're really causing a lot of frustration. And I think Nvidia here will be some context and clues there. I'm sure the numbers are going to be great. I'm sure the revenues will be strong. I think the market will be keying off of really the data center kind of pipeline, the build out, the Blackwell Rubin, outlook there on how all of those sales are going. And then there's also China, of course, on how some of the revenue might be coming in. So that'll be interesting to watch. If we get into the numbers this week, oil really, kind of stole the show. Again, I think this is kind of idiosyncratic. This is specific to a lot of the tension right now geopolitically overseas and this weekend. Gold was also bid again this week, up 1%. And you can see that equities, generally speaking, were pretty, strong, or I guess positive. They did try and sell off a couple of times this week. They could not crack. They could not break down. The Qs didn't roll over. The bid was firm. And again, this was a shortened week. So this was only a 4-day week. I did take these numbers about 20, 30 minutes before the market closed, so they might be a little bit off based on the weekly closes. Again, you can see S&P kind of opened the week at the lows and then sort of drifted higher, grinded higher. But when we look to the right here on the 3-month view, we're really still just the same place we've been for a long time now. VIX is going out around 19. It's relatively elevated. It's on the upper end of its range that it's been in. So there's, again, a little bit of concern out there. There's a little bit of nervousness, mostly around just the increased military activity backing up in the middle of the VIX. US dollar continuing higher this week, again, kind of open near the lows and continuing to lift up. We're still kind of in a bigger downtrend, but, getting a more meaningful bounce from the January lows. 10-year Treasury yield, like we said at the beginning of the show, 4% is going to be the big level to pay attention to. We're still above it, but we're kind of, slamming back down. We broke down from 4.2, and we are falling back towards the lower end of recent ranges. In terms of sector performance this week, communication services, industrials, financials, those were the top three. Those were the top three losers last week, so there's a little bit of rotation and strength out of defensive, out of sort of the safety areas and into the technology spots. Breadth under the hood did improve. So this is our smart trend filter. It's available for TradingView and TC2000 on our website. But you can see that we've got a lot of positive outlooks now on the daily time frame for the sectors underneath the hood. And so that's good to see. We still have technology, healthcare, communication services that are kind of chopping around. Financial is still on a sell signal for us. Consumer discretionary still on a sell signal for us. So it's not unanimously positive out there, but breadth again has been strong in this market, right? Like we talked about the last few weeks, there is plenty of strength out there. It's just mostly in the under-owned areas of the market. This week, we did see 52-week highs dry up a little bit. And again, that's that rotation, right? So we got a little bit of rotation back into tech and into some of the heavyweights and some of the former leaders. And we're still not really seeing at all any stocks hitting 52-week lows. But now we're just waiting to see kind of this rotation game, this hesitation that the market finds itself in. Here's a chart of Bitcoin. Last week, I outlined sort of a tactical trade that I had put on in Bitcoin. I still have that trade on, didn't touch it at all. It was noisy. It was getting a little bit uncomfortable towards these lows, but basically I was using, and still am, kind of 65K is a general area where I would start to risk manage this. So I still have the tactical position on. Again, I'm not looking to be a hero here or make any bold call. I'm just looking for some type of, reflex oversold bounce into the mid 70s. It's getting a little bit long in the tooth here. So I will probably have some action to take on this next week, one way or the other. But I still have the trade on and we'll see if it can happen. Next week for econ data, we've got PCE, the price index coming out. We have PPI as well on Friday. So a couple of reports to pay attention to. And with that, let's jump into some charts. All right, we are back. We've got TC 2000 open. This is the S&P 500 cash market weekly chart. Weekly chart, look how boring it is out there from the index level. Overlap. The market is not picking a direction. It is slogging sideways. And again, it is frustrating the majority of traders right now. Bulls want this market to get going. And then bears are saying, let's crack this down. Let's get some type of rollover here. And we are at a stalemate. We are waiting for a catalyst. S&P here, daily chart. Again, it opened. It was a short week. So the first day of trading was Tuesday. And we did have a wide range session on Tuesday. We briefly, barely undercut the lows. And the bid came in. And the market basically grinded higher throughout the week. So when we look here at the S&P 500, there's not a whole lot to overanalyze. We're back in the middle of the range, and we are back to paying attention to the lows around 6,800, 6,780, and the highs at 7,000. Until something breaks out, we really need to just be alert not to be over trading. Nasdaq 100, right? The QQQ. Last week we talked about, I guess, if we back up even further, we talked about the Mag 7 and how terrible they look. I still think they look terrible, but they were up this week. They were up 2.6%. So we did get a bounce off of the lows. Here's the daily chart. We're still making lower lows and lower highs. Individually, these stocks still look terrible. And if we, look at our breakdown zone, we're kind of right here. Again, I'm using a proxy. I'm using the MAGS ETF. But generally speaking here, you can see this is still has been an underperformer for the year. If we look at the Qs, it fares a little bit better, but we didn't get the breakdown this week, right? We are still in this choppy mess, potentially a topping pattern. Lots of folks, quickly now wanting to call this a topping pattern, but it does not have to be. It could be a long sideways continuation pattern in the context of a secular bull market that we have been in for multiple years. We just need to keep an open mind, right? Again, I am bearish on Mag 7 and a lot of the tech software names. That's not a surprise, right? I think most people could be. We have spent 5 months going nowhere, so I want to keep an open mind that this is sort of a correction through time, that eventually this market will or could find its footing. So that's what we are grappling with right now. The QQQ back up, but still in the lower half of this range. I still think, again, Nvidia, we'll talk about it in a second here, is going to be one of the big catalysts. Russell 2000 still performing the best, but still now in its own sort of shorter term pattern, going sideways and consolidating. We talked about the VIX. It is elevated right now, so we're up in the high teens to 20, and we're hanging out here, right? And so again, you've got earnings next week, but you also have the geopolitical tensions, and so maybe some more confusion now where tariffs stand. So this explains it, but there is protection out there that is essentially being bought up or has been bought up for this market, which is again why we might just move sideways longer than most people want. If we talk about oil, we showed the chart earlier, but you can see this kind of moving back up to 6-month highs, catching a little bit of a bid. Gold was pretty firm this week, 1.3% up, highest weekly close now for GLD. And if we can get follow through next week, we can start looking at these prior highs. We still remain heavily invested here in GLD. IEF, we talked about it. This is 10-year Treasury bonds. You can see this starting to potentially look like, just a big kind of bottoming pattern here. Again, that's a big grand call. We need to just, crack 4% first, and then we can start talking about that. TLT, again, looks pretty good. You go all the way out to zeros. They look pretty good as well. The price action is showing higher, but it has been tough to sort of sustain momentum in the bond market. Emerging markets, right? A lot of people are US centric, and I get it. It makes sense, and it's been the right place to be for a very long time. But this year, things have changed, right? It's not mega cap tech, it's energy, materials, industrials, and it's not the US, it's emerging markets, it's international stocks outside the United States. And you can see EEM, not a concern in sight this week. In fact, it closed at new highs and it had a nice uptick in volume. So again, other things are still working in this environment. And so if you choose to play that game, there are other opportunities out there from a new highs and a trend sort of perspective. A couple of the other areas I want to talk about, I think you have to mention software again and take a look at this. This is the IGV on everyone's radar again. If you didn't know what this ETF was at the start of the year, everyone sure does now. And this looks just absolutely terrible. If we want to look at a chart worse than the Mag 7, we look at software specifically. IGF looks horrible. Everybody will point to it being oversold or too cheap. I disagree. I think it can go lower. I think it is trading like it wants to go lower. I don't have a horse in the race, so I'm not short it, but I'd certainly want to be short it rather than be long it. And I know a lot of folks are saying it's too overdone, but this looks like a continuation pattern to me. Again, I'm not trading it, but it just looks like we want to come down here and at least flush the April lows. That was the target. That was kind of the analysis, the chart I posted on X about 2 weeks ago. I think if you got some good panic flush below 77 or 76, maybe you've got some opportunity for some type of rebound trade here. Again, I do still think that going under the hood, finding select software names that are maybe getting punished unfairly is the better approach. That's what I continue to do. I'll give you one name that probably my favorite name in software land is Cloudflare, but I don't have a position in it. I'm not looking to be a hero. I still think its price action looks pretty messy and terrible, generally speaking. So I need to see it strengthen up. I need to see more signs of bottoming, whether that's a puke lower down in the lower 100s or it's a breakout over 200. I'm just waiting. I don't want to get chopped up. I know how long and how painful of a process this can be. I've been through it too many times. So I just choose to observe, but it seems like IGV is looking heavy again. Oracle, again, kind of breaking back down, but do know Oracle is off the lows, right? So that is, again, for maybe some value is an interesting word, but for you value investors, maybe Oracle is finally gotten cheap enough, right? Maybe IGV breaks lower and then Oracle does a double retest here around 136. It holds, and that can be some signs of bottoming, right? Like that's what we're looking for as technicians. Use the charts to your favor. Don't just try and blindly buy because something's oversold. Oracle is rolling back over. There is a gap to fill, but it's not pinned at its lows like IGV is. All right. So I think that's pretty clear where I stand on that trade. XLRE, I posted this chart on during the week. I think this looks good, right? Like, again, outside of tech, there are these areas of the market that are pretty under-owned and, retail doesn't talk about it. Real estate, XLRE. I did take a position here this week. I didn't use the XLRE. I used, oh boy, I can't remember the name of the ticker. It's essentially the Schwab equivalent of XLRE. So I do have a stake in this. Again, just looking for areas of the market where I can rotate some cash. Instead of holding a bunch of cash, where can I, kind of participate in some of these other ends of the market and still try and catch a little bit of upside. So XLRE, I took a position in that. But here's the weekly chart, right? I mean, it's gone nowhere for over a year. Started to break out, volumes coming in. And so looking for a little bit of a swing trade in that area of the market. Let's look at Nvidia. So again, Nvidia's next week, gone nowhere since July. Had that quick breakout that failed. And so again, we are just very much sideways here. And I'm sure the numbers are going to be great. We just have to see what the market reaction is. We've seen a lot of companies, especially in technology, that have had great numbers. Look at Cloudflare, just back to one of my favorites because I've been following it a little closely. Numbers were fantastic, right? Tons of orders, tons of growth, all, everything that you'd want to see, and the stock couldn't get going. And so you just have to be careful that, Nvidia, we don't know what's baked into the expectations at this point. The thing I will say, though, is semis have been very strong in this market. This is effectively what's been holding up the Qs, really. If you look under the hood here, software has been terrible, but hardware and semis, this, of course, is where all the action is, right? Look at something like an MU, Micron, or SanDisk, or Western Digital, or any of your, pick your semiconductors. They're holding up, or they're at least they're trending higher, or they're at least holding. And so that's where a lot of that strength is. And so I think we'll get a lot of interesting, hopefully a catalyst here after the report on Wednesday. I think a lot of these other names, so like an Iron, for instance, I always pick on Iron, or I always go to it first, is kind of the heavily owned retail name, but in the data center kind of AI build out. This was, the huge winner in 25, and it's still consolidating, and it's down 50-ish, 40%, 50% from its highs. Again, I think this is actually pretty healthy. I think this is fairly constructive, but this is the painful spot that the market finds itself in, is even these growth names that were working in last year, they still cannot find their footing. It's frustrating retail, it's frustrating growth investors. And so we're still just, again, kind of making everyone wait and see. Cypher mining very much in the space. I'd prefer Cypher over Iron personally, but I don't have any skin in the game at this point, but I'm paying attention to them. I'm watching these names. So these are still kind of like cooling off. Wolf, I posted this on social. This one's an interesting one as well. Still in this kind of like GPU sort of warehouse type of area. And then you go to space, right? Space was hot for a while. And now if you look at ASTS, so we're down roughly 40% from highs. So we're back in pullback mode. PL, which is one that we were trading for some time, back down, 25, 30%. So we're getting pullbacks, we're getting rotation, we're getting retracements in these individual stocks and sectors. Indexes, though, still stuck sideways. All right. So that's it. That's kind of what we're looking at. I do want to leave you with a little bit of a sneak peek here. So this is our dashboard. I showed it last week on our trading system. So both Galahad and Rocket subscribers can see this, but this is kind of the daily snapshot. So this is updated. This is a Friday. So we've got our quick summary here. Markets are up 0.7. Galahad was up 1.5%. QR was up 2% on Friday. We got a new buy and sell signal on Quant Rockets. Our momentum, you can see here, we've got some enhanced charts that will be coming, but there's really not a whole lot of clear momentum right now. And we're still finding that under the hood, that it's still a tricky-ish market environment, and we don't quite have the directional oomph underneath the hood. And then if we take a look down here at our all-weather Galahad portfolio, we're still rocking with gold as our highest position, as our largest position. And then you can see just the performance over the last 5 days and some of the insights. I'm not going to show you any more of the back-end dashboard here because I want you to sign up for the webinar on Thursday. The link will be in the description of this show, and we're going to debut the more specific pages behind here that did get some love. I'm going to leave you with two names from our Rockets Momentum dashboard. First is FN. So this was a new buy for us Friday morning. So we picked up shares right here at the open at 510, and the stock is breaking out. And you can see again, it's been a huge winner. It's been in a nice long uptrend, and it's now moving up, bigger volume, and earnings are out of the way. So that's our first one there. That was a new signal Thursday night into Friday. And then NXT, Next Power. I've highlighted this a handful of times, but it is still pretty actionable here. This was a trade we got involved in back in here somewhere, or here. So we've had it now for, I think, all of 26, but it broke out after earnings, and now it's just consolidating sideways. So again, if you zoom out, this is one of the ones that again has been in a nice big uptrend. It's consolidating sideways. Solar's been hot again this year, kind of along with energy. And so these are some of the plays that are still working right now in this environment. So there are momentum opportunities when you start to look outside the usual suspects. So that is it for me. That is this week's wrap. Good luck for all those playing the Nvidia earnings. I think next week should be an eventful one. And don't forget, we have our webinar on Thursday. Come check out what we're building and hopefully give you some insights as to kind of the thought process behind it. You could always use it in your own trading strategy, even if you don't find that the membership is right for you. So that is it for me. Have a great weekend. We'll see you back here next Friday.